If you're holding Bitcoin right now, this is going to be a very important video for you because Bitcoin is in a pretty classic setup right now that generally leads to a little bit of pain. Fear and Greed Index, as we know, has been peaking up quite nicely. We've managed to go from 30 all the way up to 52 and now pulling back down to 45, which is where we were just a few days ago, 2 days ago. We're about to get this updating within 4 hours, but guys, the fact is sentiment has really picked up while the market has shot up here, and it's important to put this in perspective. We already know the deal. Bitcoin hasn't been down, hasn't been up at these levels ever since the FTX drama. Right when that started was when Bitcoin was trading up here, which I think is a really important thing to keep in mind. And one of the things we're doing right now is just really trying to break above this level. Breaking above this level, that FTX high, is the most critical thing that Bitcoin can do right now on its way up to basically its next key areas of resistance, which for me will be $25,000 and $30,000. Very important level. And what it looks like to me is it's potentially setting up for a bit of a trap. Now, we've actually seen this happen a lot on this chart, and I want to show you a little bit more about what I mean. If we rewind this chart and put this on like the 15-minute time frame, you can get a bit of an idea of what I'm describing here by taking a look at this, where we can see pretty nicely that with the exception of this kind of follow through right here, what the market ended up doing was it set a high and then it couldn't like quite get above, and we just kind of spiked up again, and then bam, we fell right down. And in any other market situation, over the past basically year and a half, whatever, we would have generally expected to see this really drop down quite low. And we have a lot of examples of the market doing this, basically what we're doing right now. And if I just rewind to where we are right now, I just want to make this point clear to you before I show you these examples, which is that the market is really trying to push above this very important resistance level, but it seems to be struggling, right? I mean, clearly something is holding the market back, which is a good thing because we're rising up really quickly. What we have now, I think, is fine. We've basically been trading sideways more or less for 2.5 going on to 3 days. So as far as a correction goes, this is the most substantial correction that we've seen ever since we were trading down at the low 17K range. We're now in the low 21K range, right? So this is a huge price increase of 22%, which happened literally, I mean, most of this price increase obviously would have happened within just over 2 days here, 22% up. So to see a little bit of, kind of just consolidation is a really good sign. But what it looks like the market could be doing is just trying to peak up, maybe grabbing a little bit of liquidity up here, and then bam, just kind of coming right back down. And this is something that I want to describe to you guys, because as far as kind of like realistic chart patterns go, this one is really high up there. And with things like the Fear and Greed Index, I think that's important to look at. I do want to focus a little bit on the long and short ratio, which right now is going in our favor. We do have a pretty good long and short ratio, in my opinion, where a lot of the retail are actually going short. I'm just refreshing the page here just to make sure that I have the most up-to-date information. And yeah, we can see that 52% of retail are going short right now, which is a pretty good, metric to show us that, potentially a lot of people are quite bearish on this market, and especially, retail, bearing in mind, are generally the losers, right? We already know that, 90% of traders usually lose their money. So you don't want to be siding with the 90% generally. And so what I think we have here right now is a situation where a lot of people are kind of betting on the market going down, which kind of, evens this out a little bit. And I'm going to keep telling you why. This is my job. I'm an analyst, right? I'm seeing something that's potentially dangerous, but and it's not to say that I'm necessarily saying that I should trade this or anything. I'm just putting this on your radar because I think a lot of people could be getting quite excited about this. And this is what this YouTube channel is about. I mean, we're going to see ridiculous price action, and then you're going to come here and you're expecting to get very level-headed, calm analysis. And that's exactly what I'm aiming to bring you guys. And a big part of that is giving you some analysis and then poking holes in it myself. Just like science. The process of science is that you kind of go in with a theory, go in with some sort of expectation, but your main goal as a scientist is to disprove that expectation. You don't want to prove it, you want to disprove it. And that's what we're doing as traders as well. So I'm going to get to that in a little bit, but if we carry on with what we're seeing right now, I want to show you an example of where we found this in the past. And guys, there's so many, it's hard to pick. A good example would potentially be what happened over here. It's a bit of an overshot because we went up really high, but I'd be focusing on this resistance level right here and how the market kind of deviated above it and then came right back down. Now usually in the instances that I'm describing here, we wouldn't pump up this high, right? We'd probably only go like this high and then bam, come right back down with our classic kind of deviations. I guess you could say that this is a better example of it, but what I'm looking for are the bigger drops, right? These are here's a great example example of exactly what I'm describing on a slightly larger time frame here, where the market ends up finding a little bit of resistance. We drop down a little bit of resistance. We drop down to the same level. We form a really nice bull flag. Bam, we get our breakout, but the breakout is short-lived. What happens here is we grab a little bit of liquidity, right? A lot of people are piling in their long positions. A lot of people are buying Bitcoin here, and then the price drops down massively. And this is really, really good for the market manipulators. This is really, really good for exchanges, because it means a lot of people lose money on this, because we get this resistance level. We get this nice bullish development. A lot of people are quite excited. They buy this breakout, which is good technical analysis, right? I mean, that's what you would expect to do as a trader, especially if you've kind of read your common textbooks. But if you don't have that extra bit of knowledge, extra bit of kind of training as a trader, which we always talk about inside of the VIP group, which you can join by following these steps on screen, then you wouldn't know that actually these are quite often liquidity grabs that we get a little bit of a breakout, but they're quite short-lived, and then the market just sends you lower. And if you entered a long position up here, you're going to have to eventually, with your stop loss, you're going to have to sell it. In order to close a long position, you have to sell Bitcoin, and by selling Bitcoin, you're pushing the order book down. So we get a really, really big, basically cascading waterfall. It is the most typical setup for Bitcoin. We see it happening all the time. I mean, we've got some other good examples right here, just on a very small time frame. You can see it happening constantly, right? If we look at this kind of general area of resistance, we get progressively bigger and bigger pumps above this green line right here. But the biggest one right here is what actually undoes it for Bitcoin, and then bam, it sends Bitcoin a little bit lower, right? So there's a lot of different instances of this, and the key tell is that this will always happen at market tops, right? So we look at this right here, another classic example. Keep hitting the ceiling, keep hitting the ceiling, keep hitting the ceiling, get a nice pullback. We break the ceiling, but it is short-lived, and then we come right back down. Very, very typical. Obviously, we know what happens next. I can keep showing you this for days. It's a very typical kind of setup for Bitcoin. Another beautiful example right here. See, Bitcoin's got a bit of a temporary ceiling right here, break above it, grab some liquidity, come back down. It happens a lot, and especially recently in this market. I mean, it's a key characteristic of the market, and that is just, quite frankly, guys, that is just undeniable. I mean, you'd be hard pressed to deny what I'm saying right here. I'm not saying anything particularly controversial either. I mean, this is pretty straightforward analysis in my opinion. Look, perfect example right here. The market loves to do it. Now, I've shown you this on the 4-hour time frame. Now we're on the daily time frame. The market loves to do this. Resistance, pullback, break that ceiling, grab some liquidity, come back down and crash the market, right? Very, very typical. And I think with things like the fear and greed index being where it is now in basically neutral territory, I think with people just kind of, getting a little bit too excited in general, I don't want to say we're too excited yet, but we're definitely excited. These are signs to me that we could be looking at this thing kind of coming to an end for a little bit of a pullback. And that's something I want to keep on your radar. Now, the other thing that we could be seeing for Bitcoin, as I said, to kind of balance out this analysis, is that we could potentially be in some sort of a rising parallel channel that might look a little bit like this. And again, these are generally going to be bearish patterns, but for Bitcoin, I mean, the last time you heard me talking about it was right here, and I was warning you guys that this is actually, I mean, yes, generally they are bearish patterns, but for Bitcoin, these generally work in the opposite way, and Bitcoin generally actually pumps out of these. I've actually given you guys analysis on patterns like this a lot in the past. One of the biggest trades I ever made in my life was on these patterns, and you guys who are inside of VIP knew all about that. So that was very, very cool. I mean, I pulled a ridiculous amount of profit in terms of percent on that one, which was very, very impressive indeed. And it's just kind of understanding the kind of characteristics, right? Because like I said, some of this quite, good, I would say, textbook technical analysis, which just won't work. It'll be what the market makers use to trap you in your long positions, and then you kind of get stopped out, right? And I think that's a very important thing to be keeping in mind, because when we have that kind of situation, if you're aware of it, like where not to put your fingers so that you don't get, cut and caught in the market. And I think that's a really, really important thing to be doing. So we could be in one of these situations as well right now, though, which kind of balances it out, because we've seen it before many times. It's also a very common pattern for Bitcoin, where we just kind of keep slowly trending higher after very quickly trending higher. Then we kind of, a little bit slower have that, kind of gradient of attack right here, which certainly could be something that ends up playing on the market. And if that does happen, then, it's hard to call for a target. You could just kind of draw a leg like this and say that, we might have a kind of similar move, looking a little bit like this from right here, potentially putting us at 22,900, which would actually make a lot of sense. This is quite a heavy area of resistance as far as, our relative zones go now. I mean, we don't have any particularly heavy resistance, but there's definitely this peak right here, which really sent the market back down very, very quickly, that we could be a little bit concerned about. There's also a little bit of support resistance here from the past as well. So, it does make sense. And if we take it actually all the way back to what happened back in 2020, 2021, there was a little bit of consolidation here as well, right? So the market does have some history around this price level. Definitely fair to expect a bit of resistance there, but I don't think we're going to worry about that too much, right? I mean, that's a really nice level for Bitcoin to be at. And so the key thing is going to be that if we do end up kind of seeing this ascending kind of formation result in another breakout, that could be very, very juicy for Bitcoin indeed. And, one of the other good things that's going to be happening in this range is that if we do take a look at where our momentum is, because we've kind of taken a little bit of a break, we've now actually given our momentum indicators a chance to catch up to the market on this very short-term 1 hour time frame, which is also very, very good because we so far haven't actually failed this 1 hour EMA ribbon. In fact, if we kind of trace it back to where the market really started to move, you can see pretty well actually. Like we had a decent spread all throughout, basically starting over here is when we had a decent spread. And obviously, if you know how to use these indicators, this is when you'd start paying attention. If you don't, type this into the YouTube search bar to watch my free tutorial on how to get this indicator and how to use it, which is also part of the wider Foresight Academy courses that you've got when you follow these steps on screen that you can gain access to free of charge as a VIP member. But right here, ever since this became useful, and if you're trained on this indicator, you'd know to use it from this point onwards only. We've got 1, 2, 3, 4, 5. Let's keep going. 6 right here. 7, 8, 9, 10, 11-ish, 10. I mean, what am I talking about? 9, 10, 11, whatever. You guys get the point. A lot of success from this indicator, basically. I mean, amazingly reliable, very, very reliable indeed. Super dependable, I would say, as far as a support level goes. And that is very reassuring. I mean, it definitely tells us that there is, something here that's worth paying attention to. And the other thing is we're also giving out 4 hour EMA ribbon a chance to catch up to the market. And when this catches up to the market, we don't even necessarily have to penetrate it very much. We can just get, basically next to it or, somewhat in it, and then start to see some really, really nice bounces. And right now, that would only mean Bitcoin, kind of spiking down a little bit, maybe grabbing some liquidity on the downside, and then bam, we can carry on upwards, which also makes a lot of sense, right? As far as this kind of, borderline fucking annoying price action goes, this actually sounds pretty typical of Bitcoin, doesn't it? I mean, if you've been in Bitcoin for a while, if you're, you got a little bit of time in this market, you're going to know that this is kind of, fairly typical price action, I would say, for Bitcoin. And so this is the kind of thing I want to, make sure that you guys are keeping in mind. I'm not saying that this is definitely going to happen, but it certainly looks pretty likely to me, just given what we've already seen in this market. And that's why I think this is really just very, very important to be keeping in mind at a time like this, because again, people are going to be losing perspective of it. If we take a look at some of our altcoins, we're going to see a broadly similar picture for coins like Ethereum. Obviously, it's doing a little bit better because it's just got, more aggressive price action. So we've got some support a little bit closer, probably already failing the 1 hour. No, we're not quite failing it with a couple of wicks, yeah, but it's not quite too bad yet. If we remove our indicators and just kind of zoom out, take a look at where Ethereum is with a little bit more perspective, we are getting a little bit close to resistance now. Ethereum hasn't actually hit its area of resistance yet on its chart as far as I'm concerned, so it does have a decent amount of room to still rally up, but this is where I would expect it to find a little bit of resistance within this kind of $1,1700, $1,800 range, around about there. And I think that this all kind of plays in with the S&P 500 and so on as well. I mean, we saw the bulk of these moves happening when our global indices were not trading anymore. This is only going to start trading within about 18 hours, or basically nearly a full day away, that we're going to start seeing this trade, which is a very long time away. But if we do start to see some nice follow through, that would potentially mean, maybe just a straight kind of blue sky breakout on that Monday. If we get a really nice bullish open on Monday for the S&P 500, then that would be a hugely significant sign, in my opinion, potentially telling me that we could have a really, really nice green week. And obviously the dollar, I was saying that the dollar is in a pretty, it's in a support level. There's no denying that, and it's in a historically very, very important, green box right here. I mean, we generally do see, some quite big things happening at this green box right here, whether it's rejections, whether it's support retests that rally the market much higher, which is exactly what I'm worried about, potentially something like that happening again, which do not act like it's impossible. It's certainly very, very possible for the market to pull that off. And so this is something that I think is important. I mean, this could definitely act as support, but bottom line, if it doesn't, if it doesn't act as support and we kind of just penetrate through it, well, we know what happens when that happens as well, right? If the market loses this area of support, it's usually really, really bad for the dollar right here. We've seen a good number of instances of that where it dips substantially lower upon losing this green line, so this green box. So I'm not saying that that will happen, but if it does, certainly fair to expect that we could really drop very, very low, which again could definitely clear up those skies for assets like for indices like the S&P 500, and certainly for assets like Bitcoin. That would be one of the best things we could possibly see. So I'm not trying to wish that the US dollar crashes, because that would be a little bit psychotic of me, but at the same time, just kind of keeping in mind what we're seeing with our technical analysis, that would look really, really good for these charts, and that is something to be keeping in mind. I also While I'm here, just want to remind you guys about what I'm seeing on this Fibonacci retracement, especially for those of you that, for whatever reason, didn't manage to catch the live stream and so on that I was covering, where I was really breaking all this down. And by the way, if you didn't, definitely make sure to subscribe to the YouTube channel and all that good stuff. And while you're there, I want to remind you guys that Bybit and PrimeXBT are both offering you some really, really big bonuses right here of $5,000 and $7,000 on PrimeXBT. And what's really cool about this is that this is free cash that you can get when you sign up using my links in the description down below. All you got to do is make your deposit. With PrimeXBT, literally 7% of whatever you deposit up to $7,000 will be given to you in bonuses. So you can get up to $7,000 in bonuses, and that's dependent on what you deposit. Whatever you deposit, you just get 7% back as a bonus, and you can trade with those bonuses, which basically acts as like a demo account. It's like demo money, free money that they're giving you. But the cool thing is that if you make money using those, $7,000 or in this case $5,000 on Bybit, you're going to be able to keep your profits. And if you put them together, I mean, that's a lot of firepower, right? I mean, 12K that you can just throw into any trade, like a 10x leverage trade, for example, and you pull like a 10%, no, that's 10% is way too high, but let's say you just catch a 2% price move, right? Like, let's say the market drops down by, I'm not showing this correctly, but I'm just kind of putting this into perspective. Absolutely not saying you should do this, but like this is a support area on the Fibonacci. If it drops down by 6% on 10x leverage, that's a 60% gain. And you do the math, you would keep that money on $12,000. What is that? I'm just curious. 12 times 0.6 would be a $7,200 profit that goes straight into your pocket, which is extremely impressive. Very, very cool indeed. So that's free money that you get just by following my links in the description. So definitely go ahead and check them out if you haven't done so already. But the Fibonacci right here is showing us that we're nowhere near an adequate reversal right now. I mean, we really have quite a fair bit to go. And so if we do end up dropping down, I am going to be looking at some of these price areas, like the 236, certainly like the 38233 potential areas to find some support. And if we actually drop some horizontal lines here to just kind of visualize where these support areas sit, it's at a really good area. I mean, this is, these are areas that the market was using, quite nicely to find some support, stretching all the way back to June of last year with our support hits, with a little bit of resistance even over here, just a little bit. Definitely something that I think could end up being an important level for the market. And I'm sure we're going to start to see some Ichimoku action around there, if not a little bit higher even. Let's take a look. Yeah, 4-hour Ichimoku cloud actually falls in line perfectly with this price area, meaning that if we kind of fall down here over the next couple of days, we could end up seeing some really nice support getting captured in this range right here. And I think if we switch over to the 1-day EMA ribbon, we're also going to see a similar story. Yeah, I mean, this is going to take a little bit more time to catch up, but kind of at this rate, I think it's totally fair to say that over the next few days we could be seeing the EMA ribbon trading all the way up here, giving Bitcoin some additional support on longer term time frames. With the 4-hour Ichimoku cloud, the 1-day EMA ribbon, just giving us some additional padding really from various different time frames, various different indicators that are completely unrelated to each other, giving us the ability to paint what I would call basically a stronger picture. So that is something that I think is worth keeping in mind. And actually, if we just kind of look at our MA forecast, the 50 is a good example here, but we could also go for the 25, we could go for the 30, and just kind of show where these lines would go with our little forecast right here. And there's a lot of reason to believe 35, you can start to see it kind of painting over here. I mean, this would make a lot of sense for the market to potentially, let's go for 40 as well. These EMA, this is how, I mean, these are moving averages, not exponential moving averages. There's a small difference, but you can see how they're really curving upwards, showing us that basically over these next few days, like basically within a week from now on this MA kind of ribbon, we would start to see something very interesting over around a week from now. But on the EMAs, it's even faster. So it's hard to say, but it definitely looks quite promising to me, in my opinion. So that is something that I'm going to be keeping an eye on. And again, lots of very, very fruitful trading opportunities. Now is a very, very good time to be aware of what's going on. A lot of people are going to be quite confused, to be honest, and quite emotional in the market, as is evident by basic metrics like this fear and greed index. So it's well worth, I think, just being set up if this is something that you're interested in. And obviously, for me, Bybit has been my primary exchange for years and years now. That I've been using them, basically hardly looking anywhere else, only using these guys for most of my trades, and it's not even close. It's well worth checking these guys out. Again, 5k bonus that you can get here. Very, very impressive indeed. And like I said, there is still apparently that 30k bonus, but it's not visible here. I haven't seen it, but they keep telling me that there is one. So whatever. Bottom line, you're getting free money, whether you're getting $5,000 for free or 30k. It's still a lot of bloody money. And Prime XBT offering you guys up to 7k as well, again with the ability to trade all these traditional finance markets with indices, commodities, and forex as well. So very, very cool setup right there. If you do want to get involved in that stuff, the links are in the description down below. And if you want to see what I'm doing, if you want to gain access to my analysis that I'm posting around the clock free of charge for you guys in my Telegram channel, gets pinned straight to your phone, then follow this link in the description down below right here. That'll take you to my Telegram channel. And if you want to gain access to VIP or my 𝗙𝗡𝗡𝗧 Academy courses, or both, you can click on my name and then send me a message. That's it. Super, super straightforward. Puts you in a direct chat with me. Yes, we could do this on a website and stuff, but it's better if you can talk to me. It's better if I can talk to you. And of course, if I don't respond to you, one of my assistants will anyway. So we'll be good. All right. Really hope you've enjoyed this one. You know what to do if you have. Hit up the like, subscribe to the bell, all that good stuff. And I'm out. Cheers. Bye.